market, we're back, and today the milestone was really setting up the stock exchange now. So we separate the capital market authority from the trading, and trading will be done by the stock exchange. So the fact that we have the first domestic company listed on the stock exchange today, yeah, that's very positive. And I think you know that we had two regional companies that were already trading on the market here through cross-listing. We have the KCB and the National Media Group. And the fact that on the first day we saw Bralirwa's share going up from 136 to 220, at least the first two operations witnessed, that shows the appetite is there, and it gives us hope and confidence that we see really the market growing and growing quickly.
Well, it's a very interesting space. As you mentioned, on the OTC market, we did have KCB and the likes of Nation Media Group, which, of course, KCB was cross-listed as well. What plans are there going forward? Because now you've got three really strong companies on the stock exchange. Clearly, you also need to start seeing appetite coming to the fore from many of the well-run companies in Rwanda.
Yeah, at least within the government plan, we have the one bank coming on board very soon in the first half of this year. We have a bank owned by government that we are putting on the market, raising its capital by 25%. So that's a sure deal. Then we have other shares we have in MTN Rwanda, which we want to put on the market as well. But we're still discussing that with MTN South Africa, with the majority shareholders here, and who would have presumption rights. But we think this should also be coming to the market very soon. And so far, those two are lined up to come to the market, and we are working on other companies where government has shares to really prepare them for an IPO, but that will take time. We have about three other companies. We have the cement factory, we have an insurance company, and another bank. So, but we look at that as maybe coming in next year.
Well, you mentioned a few companies, of course, that are partially state-owned, and of course this is a plan to start privatizing these companies going forward. You mentioned that you are currently in negotiations even with the MTN management. Are you finding that there is appetite from these companies? Because, you know, when you look at an IPO, when you look at listing, there's various reasons why a company would want to list. It's obviously for growth prospects, and also perhaps management wanting to sell out as well, or someone wanting to sell out. So that with that comes volatility as well as speculation.
One is the response we got from the Bralirwa IPO was very overwhelming. It showed there was big appetite in the market, and there was confidence into the economy from the market. So that sets a good bet or a good bet for the capital market here in general. And the fact that there is that willingness from the investors to invest, I think that rings the bell to local firms here that will be looking at raising capital through the market. I don't expect to see speculation as such at the moment, because this is a young market, and the players are not that really sophisticated to the extent of starting throwing around numbers in a speculative way. So yes, we expect to see a healthy growth within the market itself, not really that speculative.
Well, as we mentioned, I mean, we've established KCB, the likes of Nation Media and Bralirwa. You're talking about MTN, Sonarwa as well, and perhaps a bank being put part of that stable. What is your target for this year in terms of the equity market? How many companies would you like to see join the stock exchange by the end of 2011?
No, I think at the moment, if we can have the two joining, that would be a good beginning. It's really the first year where we think we are having real trading. So if we have the two MTN and the bank joining, that would be good for them.
Well, overall, I mean, looking at the liquidity scenarios as well on the African continent, and yes, we're seeing fantastic appetite coming through from foreigners, and this is changing the playing field quite extensively. What lessons can be learned from neighboring stock exchanges that perhaps Rwanda is going to implement?
I think one is what we've done is in terms of what is required as incentives to attract investors. That we've done it through some fiscal policies, but also what's important in Rwanda is in terms of the service delivery, in terms of government institutions being responsive to investors. I think that's one of the reasons why we got this overwhelming appetite from especially international investors. As you know, we got subscription oversubscribed by 430% of what we had allocated to the international investors. So we think one is the incentives in terms of on the fiscal side, but also the environment itself that we've been creating here. A smooth environment for investors is having this impact. So the stability of the economy matters a lot. We think that that will act as a foundation to whoever is willing to invest here.
And of course, you're expecting fantastic growth going into 2011 and looking forward as well. And just looking at the East African community and the role that it will play overall for the region, and of course how it's going to impact Rwanda.
We are part of the East African community, and in fact we've now entering the second year of our common market within the East African community, and that automatically has a big impact in increasing the attractiveness of Rwanda as an investment destination. Because we've positioned ourselves as an environment that is easy and attractive to investors, but then we are part of the bigger market, and so we see that as really a big push or a big positive impact on our economy, because we are now looking at ourselves as a bigger market.